Hi everyone, and thank you for tuning in. In this video, I'm going to do another installment of my Q&A with Wall Street series, and this one is with Unity Software Management and Wall Street analysts. So let's get right into it. The first question comes from Timothy Nolan, and the question asks, given the issues you had earlier in the year, but you said that the problems are behind you. This is alluding to the data measurement issues that Unity Software stock was having earlier in the year. Management said that the issues were behind. This analyst is checking in with that statement. And so John Risatello, the CEO, says, yes, given that the market shares that we've gained, it implies that we've gained some market share and the trust issues are behind us. So when they had these data measurement issues, they lost some market share, and now that they've kind of addressed them, they've worked on some of the issues, they made an acquisition of Iron Source, and so it implies that they've gained some market share. So that's good news for Unity Software stock investors. The next question I highlighted is from Jason Bazinet with Citigroup, asking, before everything slowed down in the mobile advertising market, and if you looked at the consensus numbers where Wall Street was on Iron Source and for Unity, and add in the synergies, the street was estimating that you would reach $1 billion of EBITDA by 2024. And so the CFO, Luis Visoso, response saying the 1 billion is our run rate at the end of 2024. It's not the forecast for the full year. So what we're saying is that at the end of the year, we'll be on a $1 billion pace. Okay, so that clarifies it. Instead of it being $1 billion EBITDA for the whole year, it's just the $1 billion run rate by the end of 2024. The next question comes from William Lampin from BTIG, and asking about, should we expect that going forward price hikes could become a more ordinary course of business? Of course, this is alluding to double-digit price increases that Unity Software instituted in its most recent quarter. William is asking if this can be a regular thing where the company can exercise pricing power. And the CFO responds and saying, on the pricing question, we think that this is the right move. It'll take a little time until we ramp and we get new contracts into the new pricing. So you should expect really an impact in 2023, not in 2022. So the CFO not really answering if they're going to keep doing these kinds of price increases going forward, but just clarifying that, yes, we instituted a price increase, but you're not going to really see the impacts of this price increase until 2023. So I feel like this was a little bit of a dodge from the Unity Software CFO here in answering that question. The next question that I highlighted comes from Brent Bracelin from Piper Sandler, and asking about the durability of the Create business as we're kind of heading into a recession globally. And the CEO responds by saying, so I think it's really durable. I think it's really big. I love the momentum in the business. So saying, yes, I acknowledge there's a recession coming, and, management has alluded to the fact that there is especially an advertising slowdown, but despite those facts, that they think the business is really durable, they think the upside is really big, and they've also reiterated that they think they can grow at 30% per year over the longer term. Of course, in 2023, they said the growth is not going to be 30%, but longer term, they think they can grow at 30% on the top line. And another question from Brent Bracelin from Piper Sandler, asking about any sense around the combined cash and investment level, and most importantly, concerned about the share buyback that was instituted. And the CFO responds by saying the board has approved a $2.5 billion share buyback program and will be executing that when we think it's appropriate. So, the CFO saying we have the buyback program in place. We will buy back our shares when we feel like it's appropriate, not really being specific as to when that will be, just saying when it's appropriate. And the next question comes from Dylan Becker from William Blair and Company, saying that you management alluded to elevated engagements and download trends that they're seeing and hearing. So can you please elaborate on that? And the CEO responds by saying it's probably worthwhile to dispel a couple of myths that are out there. One of them being that mobile gaming is down, and saying that engagement is actually up. Revenue growth is up 4% year over year. So mobile gaming is not actually down. So responding to that myth, and then saying that it appears that purchases are suffering a little bit more than ads are on a relative basis. Of course, mobile games are supported by either purchases or advertising, right? You either have an ad-supported game or you have a game that is free to download and has in-app purchases, or you got to pay to download it, right? So it's a mixture of in-app purchases and advertising. And so the purchases are suffering more than the ad related side of the business. And that's understandable, right? Customers, the people playing the games, are the ones that are spending the money. And that side of the business, customer spending is falling faster than advertiser spending is falling. Advertisers are generally becoming more cautious than they have been, focusing more on near-term results than on long-term returns. This is causing advertisers to pull back spending as they fear a recession. As they fear a customer pullback, advertisers have been reducing spending. And finally, I will end with these final two statements, saying we've got this. The Unity CEO saying we've got this near-term challenge. I don't know how long it's going to last. Sentiment is spooked and spending is coming under pressure. Is it going to end in Q4 and bounce higher in the first quarter? He says, I wouldn't bet on that. So investors out there, don't expect Unity Software's revenue to rebound in the first quarter of next year or in the fourth quarter, right? Saying the CEO goes on to say, sometime in 2023, we expect some level of recovery, right? So not even being specific as to when the recovery will happen, and probably it looks like not in the first half of 2023. Unity Software stock investors cannot expect the rebound until probably the second half of 2023. Most likely in the fourth quarter of 2023, if at all in 2023. Yeah, the environment out there is pressured. Advertisers are pulling back spending, lots of uncertainty out there, and when advertisers see uncertainty, they pull back spending. And then on the consumer side, they're getting pressured by rising inflation, paying more for food and gas and transportation and all of that, leaving less discretionary spending to do on gaming products. And on top of that, folks are spending more time away from home, spending more of their money on restaurants and travel and concerts and things like that, which is not good news for Unity Software stock. So those challenges are what the CEO is alluding to, and he doesn't expect them to end anytime soon. So if you're an investor in Unity Software stock, patience is going to be the key. Patience is going to be the key here. Okay, so that's all I've got for this installment of my Q&A with Wall Street series, Unity Software stock. If you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos just like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.